Welcome to DebtCircle Key Roundups. I am Vijendra.
And I am Leela.
Today we're diving into some crucial financial updates impacting India and beyond. We'll start by discussing the rising importance of MSMEs as India's second growth engine, highlighted by insights from Manji. Then we'll shift focus to a major corporate move, All Cargo's acquisition of a 25% stake in Group Services valued at 3,53,480 rupees. And finally, we'll analyze how Indian bonds are reacting to oil prices nearing $80 and what the upcoming CPI data could mean for the economy. So stay tuned as we break down these important topics and what they mean for investors and businesses alike.
Micro, small and medium enterprises contribute 31.1% to India's gross domestic product, making them the second key growth engine after agriculture. In Puducherry, MSMEs benefit from skill-based training programs improving workforce efficiency and operational performance. And banks must provide collateral-free loans up to 1 lakh rupees at interest rates at least 5% lower than other commercial loans, easing financial stress.
That's significant. It shows MSMEs are vital not just for output but also for employment and entrepreneurship across regions. Let's move on to our next article.
All Cargo Global Limited has acquired a 25% stake in All Cargo Group Services Private Limited for 3,53,480 rupees, finalizing the deal on July 8, 2026. This acquisition aims to centralize shared services across the group, improving cost allocation and operational efficiency, especially since the target has no current turnover. The transaction is a related party deal within the promoter group and did not require regulatory approval, emphasizing internal strategic restructuring.
Positioning All Cargo Group Services as a center of excellence could streamline support functions, enhancing overall group performance and synergy. Moving to our next story.
Indian government bond yields rose to 6.7368% on July 13th, up nearly 2 basis points, driven by Brent crude prices nearing $80 amid escalating Iran and United States tensions, signaling a drop in bond prices. Inflation data for June is critical too, with consumer price inflation expected above 4% for the first time in over 15 months, mainly due to higher fuel costs and West Asia supply chain disruptions.
The rise in crude prices, over 3% to about $79 per barrel, reflects fears of supply disruption after Iran's navy closed the Strait of Hormuz, key for global energy shipments. This adds to market uncertainty affecting bonds. Despite volatility though, foreign investment in Indian government bonds through the fully accessible route has crossed $4 billion, showing sustained international confidence amid these challenges. Moving to our next story.
The government is pushing to increase foreign currency inflows through FCNRB deposits, overseas foreign currency bonds, and external commercial borrowings to rebuild reserves after they fell from roughly $728 billion to $682 billion. Notably, non-resident Indian dollar deposits dropped sharply from around $7 billion to less than $1 billion in the last fiscal year, reducing a key foreign currency source.
That's crucial given the rupee's pressure from high crude prices and capital outflows. Strengthening reserves via these channels should help stabilize the currency and improve liquidity in the financial system. Encouraging FCNRB deposits is smart since they avoid exchange rate risk for NRIs and directly boost banks' foreign currency holdings, helping to ease the current economic strain. Let's look at another key development.
IIFL Finance raised $300 million through 7.60% fixed rate senior secured notes due in July 2030 under their $1.5 billion global medium-term note program. The notes have a 4-year tenor with semi-annual coupon payments starting January 2027, secured by a first-ranking charge over receivables and assets.
These notes, rated B+ by Standard & Poor's and Fitch and Baa3 by Moody's, reflect moderate credit risk but support IIFL's growth plans in the current lending environment. Listing on India International Exchange and NSE IFSC ensures liquidity, while proceeds align with their social financing framework and comply with external commercial borrowing rules. Here's another significant update.
Ugro Capital raised 19.15 crore rupees through commercial papers with a tenure of 6 months, maturing on January 6, 2027. The issue was approved by the Investment and Borrowing Committee. Each commercial paper has a face value of 5 lakh rupees, but was issued at 4,78,751 rupees. The total redemption value is 20 crore rupees.
Listing these commercial papers will improve transparency and liquidity, and with Yes Bank Limited as the issue and paying agent, market confidence in this borrowing should be solid. This discount issuance reflects a yield attractive enough for investors over the 6-month period, fitting current short-term credit market trends. Here's another significant update.
The Reserve Bank of India now mandates Indian firms to disclose detailed anti-money laundering and due diligence data on their overseas joint ventures and subsidiaries. Banks must collect this from corporates with overseas direct investments, enhancing scrutiny on foreign partners' credentials. The RBI's questionnaire probes dividends, loan interest, and capital written off by foreign entities to detect possible money siphoning or round-tripping, and firms must also report financial ratios and operational details, which weren't previously required.
This tighter oversight addresses concerns about fund misuse abroad, with overseas direct investments reaching $34 billion in fiscal year 2025 to 2026. Regulators want better visibility beyond annual self-reporting under the Foreign Exchange Management Act. For Indian corporates, this means stronger compliance and risk management as the RBI aims to safeguard India's financial system from fraud and forex losses. Here's another significant update.
The benchmark yield on the Indian government's 6.94% bond maturing in 2036 fell by 3.8 basis points to 6.7139%, marking the steepest single-day decline since July 2nd. This drop reflects softer crude oil prices near $76 per barrel and strong foreign inflows, totaling close to $4 billion since early June, which boosts bond demand despite inflation concerns.
The recent weekly auction saw robust participation, including interest in a 40-year bond, with total sales reaching 32 crore rupees, indicating investors' readiness to accept longer duration risk. Meanwhile, declines in overnight index swap rates show stabilizing market sentiment, as inflation risks remain due to possible input cost pass-through and monsoon uncertainties affecting food prices. Let's look at another key development.
Tata Capital is acquiring an 88.6% stake in Yogakshemam loans for approximately 93 crore rupees, marking a strategic entry into the gold loan sector valued at $3.8 billion in 2025. Yog Loans operates 162 branches across 4 states with assets under management of 708 crore rupees as of March 31, 2026, serving about 32,000 gold loan customers.
The gold loan market is growing steadily at a compound annual growth rate of 3.61% between 2026 and 2034, driven by rising gold prices and demand for quick collateral loans, making this acquisition timely. Tata Capital's strong brand, capital, and technology combined with Yog Loans' market presence should accelerate growth and improve customer experience, while existing leadership remains to ensure smooth transition and continuity. Now let's discuss another important development.
Bank of Maharashtra's first quarter net profit rose 26.8% year-on-year to 2,020 crore rupees, driven by a 14.5% increase in net interest income to 3,770 crore rupees. Asset quality remains stable too, with gross non-performing assets at 1.45% and net non-performing assets at 0.13% quarter-on-quarter, showing disciplined risk management.
That's a strong sign of growth in their core lending operations. The steady net interest income indicates the bank is expanding loans effectively despite economic challenges, and maintaining flat non-performing asset ratios while boosting profits suggests the bank is managing credit risk well, which is reassuring for investors and the market. Let's look at another key development.
Bharti Airtel has invested over 3,30,000 crore rupees in digital infrastructure over the last 10 years, positioning itself to lead India's 5G economy and digital transformation beyond traditional telecom. Airtel is now focusing on financial services, data centers, and cloud, committing 20,000 crore rupees to Airtel Money as a non-deposit taking non-banking financial company, aiming to boost financial inclusion.
This massive investment aligns perfectly with government pushes for AI, cloud, and data localization, accelerating Airtel's growth in emerging digital sectors. Plus, their subsidiary Nextra plans 1 gigawatt of data center capacity, backed by $1 billion in funding, tapping into India's rapid digitization and cloud adoption trends. Here's another significant update.
Fedbank Financial Services will discuss Q1 financial results for fiscal year 27 on July 15, 2026 at 1:30 p.m. Indian Standard Time, with senior management including the Managing Director and Chief Financial Officer leading the call. The conference call complies with the Securities and Exchange Board of India listing obligations and disclosure requirements, Regulation 30, ensuring transparency.
That timing allows global investors to participate easily. The call includes international toll-free numbers for the United States, United Kingdom, Singapore, and Hong Kong, supporting broad analyst engagement. This structured access should help maintain market confidence and provide clarity on Fedbank Financial Services' quarterly performance. Let's move on to our next article.
Gold futures on the multi-commodity exchange for August fell by 1.16% to 1,41,820 rupees per 10 grams, while silver for September dropped 2.34% to 2,17,448 rupees per kilogram. This decline is mainly due to a 4% surge in crude oil prices amidst US-Iran tensions. Geopolitically, US and Iran escalated conflict with missile and drone strikes, and Iran closed the Strait of Hormuz again, critical for global oil supply.
The crude oil jump pushed the US dollar index up by nearly 0.30% to 101.22, making dollar-priced gold more expensive globally. This stronger greenback is suppressing gold demand, despite its usual role as an inflation hedge. This volatility is expected to continue, with gold support on the MCX at 1,42,400 and 1,41,100 rupees, and resistance near 1,44,400 and 1,45,500 rupees. Investors should accumulate cautiously, while traders wait for market stabilization.